Your first ETF is ETC, the Evolve Cryptocurrencies ETF. You have this at around 5% of your portfolio. At least you said that in the video. Talk about why you picked that, especially for a retirement ETF. That's the thing I
Yeah.
found weird.
Well, so I wouldn't put that as the first ETF. I would actually put that as the last since it's the smallest allocation. But we can start there if you want. The thesis on including an allocation to crypto is that if you want to maximize potential returns over the long term, it's becoming more and more standard practice to include some sort of allocation to that asset class, even amongst more traditional, more conservative asset managers. But for me personally, as a relatively young guy, very far away from retirement with a very high risk tolerance, actually, personally,
Mhm.
including that just makes sense. And so that ETF that I chose, ETC, is just actually an aggregate of a Bitcoin ETF and an Ethereum ETF, which are the two largest cryptocurrencies by market cap. So it just gives like a small exposure in that portfolio to what is potentially an explosive asset class with big potential. And since I made that video, Bitcoin, for example, has hit new all-time highs just recently. So it's worked out well. Of course, that's no guarantee of future performance, but it's certainly outperformed some of the other ETFs that I included in that portfolio.
Let's hang on that for a second because I'm not the biggest crypto expert. I had a guy called Ron from Ron's Basement. He does gold and silver investing, but he got into crypto meme coins to be specific.
Yeah, I
Hyper
know that guy.
successful. Okay, he's fantastic. He's fantastic, but he's exploded in the meme coin space. So he gave me some education on crypto. I now own some crypto through MSTY and all that kind of stuff, like through like a covered call
Okay.
more strategy. But through ETC, are you just tracking the price of crypto, like that aggregate of like a 60% Bitcoin, 40% Ethereum split? Is that just all it's doing, right? So you're just track when the price
Yeah.
goes up,
ETC
that's
is
it.
it's a product from Evolve, and they also have Bitcoin ETFs and Ethereum ETFs and ETC aggregate. So it's I believe it's two-thirds Bitcoin, one-third Ethereum, and it just tracks the price minus the expense ratio, which is more expensive than other types of ETFs, but still quite low.
Do you know what it is roughly off the top of your head? Expense ratio? Is it over like the 0.06%? It's like zero point 0.2
Oh yeah,
something,
yeah, yeah.
probably.
I think it's not 2%. I think it's 1% or less. But all of the other ETFs included in my little basket portfolio are like 0.05, 0.08, something like that.
So would you suggest this for, because you said you're younger, for younger investors building a portfolio they'd like to retire off of? Or would you also suggest this for someone who is actually 65 and retired and has like a four ETF portfolio? Like, how
Well,
would you?
I should probably have led by saying I'm not a financial advisor. None of this is financial advice. And I'm not qualified to advise people on what they should invest in. But personally, as someone like I've been around for a while. I've been in cryptocurrency since like 2017,
Oh,
and
nice.
I would say compared to the average person, I have a very solid understanding of the space. And so, yeah, like if you have a higher risk tolerance, you're further away from retirement, then personally, I think it makes a ton of sense. Maybe if you're like 65 years old, 70 years old, you're retiring, or you're already retired, you probably want to focus a little bit more on income producing assets as opposed to assets that fluctuate in price significantly.
Have you been investing in crypto since 2017?
I have, yeah, yeah.
Good for you, buddy. How old are you? How old are you?
I am
Did you don't mind me
34
asking?
years old right now.
Yeah, I'm 39. Wow, good. That's good. I literally always stayed away from crypto. Sort of my thesis because I didn't quite understand it because it looks speculative. I didn't really like. I didn't understand like what the value was. Like, oh, you can't buy anything with it. So I sort of just stood away because I didn't really get it. I don't think I still quite get it. I'll be honest. Like I try to wrap my head around it. Like we're like, hey, it can't be used to buy groceries. So then that sort of like confuses me. And it only has value when you sell it for cash. So you're back at cash all over
Mhm.
again. So like that's the weird. I don't know. That just feels weird to me. But I'm in it, and I'm slowly getting 5% of my portfolio switched over to crypto. So regardless of what I think, I just know that I can't just not be involved in it anymore. So I'm getting involved in it, but small, like 5%. So that's
Yeah.
that.
I mean,
Uh,
technically, like on that, uh, it has value in as much as people are willing to pay for it. It's the same as any other commodity, really, that doesn't have a whole lot of intrinsic use, like diamonds, like gold. Only a certain percent of gold is actually like used in manufacturing, and the rest is just a speculative asset.
that's a really good comparison. Gold, because that's all gold is. They just hold it. No one's using it. Well, a little bit, like you mentioned, they're using it for a little bit of stuff, but it's just being held in vaults underground. Ron was saying something. They just dig it up out the ground to put it back in the ground in a nice cleaner vault. That's all it is. That's all gold's doing, right? That that's a good way of looking at it, actually. All right, let's move on to the next one. I'm just going to hammer through these four ETFs. VCN, the Vanguard TFSE Canadian All Cap Index ETF. That's interesting. Why'd you pick that one?
So that one is, yeah, it tracks the Canadian stock market, the biggest companies in Canada, a couple hundred of them. So by one share of that, you're buying tiny fractional amounts of all the biggest companies in Canada. And I included that at the time just to increase sort of the geographic diversity of a portfolio. But one thing that I've noticed and I've sort of changed my thinking on a little bit is that investors in Canada are generally biased towards buying Canadian companies, even though that might not always actually be the best option. And that's
Mm-hmm.
probably true of investors in every country, that there's some sort of implicit bias to owning your own national companies, the stocks of those companies. So I did include that in the portfolio for a couple of reasons. One, just to increase diversification uh, across companies, but also across regions. And then two, because over the past few years, the Canadian stock market has actually dramatically underperformed the US stock market and also some global markets. And so the thinking is that since Canada is kind of more heavy on resources and certain specific industries, it's possible that that underperformance could turn around at some point, and you don't want to sort of miss out on that. So, including a small allocation towards the Canadian segment in the portfolio made sense to me.
What kind of percentage would you put on Canada? I'm thinking Canada in general, not even this specific ETF, because there's a lot of ETFs that sort of cover the Canadian market broadly. What
Yeah.
percentage do you put on it normally?
At the time when I made that video, I put way too high of a percentage. I think it's been a while since I published that, and I didn't rewatch it recently, but I think it was like 20% or something in that realm. In that realm. Um, but now I have significantly less of my portfolio allocated to the Canadian market, and I don't think it makes a ton of sense to be overweighted Canada like that. Yeah,
Yeah, I started when I first started investing. I was probably overweighted in Canada a long time ago because I think everyone starts if they come in like just new to investing, you start with a home country bias no matter what. Because I think
yeah,
that's just what you know your country. You're like, okay, great. My economy seems to be good enough. But I probably started at 20 something percent a long time ago. Now I'm at 10 or under 10% in
yeah.
Canada. And I think that's sort of like my non-financial advisor advice that I give to people, me as just a guy who has a marketing background, just a random dude. I say uh 10%. That's kind of, and I even do that for emerging markets. I go, like developed and we're going to get into that anyways. Developed and emerging markets, I think I put them at like 5% each, like 5% for developed, 5% emerging. But I think there's more wiggle room there than there is just for Canada. I cap that at 10%. Okay, so now let's move on to the next one. VIU, the Vanguard FTSE developed all cap except North America index ETF. This is another Vanguard one. I kind of have a little bit. I don't even know why I have a preference for Vanguard, but I do have a preference for Vanguard. Do you have a preference for Vanguard, or that just happened to work out that way that came
Not
out in
really.
VIU?
And there's other comparable products uh, by like
Yeah,
BlackRock or other ETF issuers that have very much like the same fees. They track pretty much the same exact companies. So it's kind of like doesn't really matter which one you choose. But the reason why I chose this ETF specifically is because it is excluding countries that I didn't want to invest in, like China, for example, but still tracking the global markets, excluding Canada and the US, which already was allocated. separately in the portfolio.
That's good. You talk about the China thing. You don't invest into Alibaba or and that's you're not on that train. 'Cause I know
No,
Warren Buffett
no.
increases exposure to China. Any reason why you avoid
Yeah,
it?
uh, just personally, I think the geopolitical risk is too high, and
Yeah.
I overweight that in my decision making because sure, like maybe the price of these Chinese stocks will skyrocket and I'll miss out on some gains. But the risk of zero for non-native investors is too high, in my opinion. That it's basically like a no-go for me. So
That's the exact
yeah,
same reason. I I got pushback on that a little bit. I don't know how, maybe I explained it wrong, but it was 100% the geopolitical, no matter how good it seems. And I just feel, and I'm sure the government has a ton of control over corporations here in North America as well. I just don't like how much control they have over it. Like, Alibaba, Jack Ma, the CEO of
yeah,
Alibaba, he said some, like, that country, that, I don't even know if this video will get flagged now on YouTube. Whenever I talk about China, there's a flag, but it's okay. But like, he spoke out a little bit about like the CPP or whatever it was. He disappears for a year, comes back, and he's been reprogrammed to be like, hey, and he's giving lectures in schools. I was like, what's going on here? You just took a billionaire guy who's the head of a large corporation that was funded by the government. He disappeared for a year because he spoke out and he came back. I'm like, so technically you could have crushed that company, replaced it with another company, put another skin on it, and then what does that happen if you invested in that company in general? Like all that stuff concerns me. It's too much control by government on the corporations, and that's just my sort of outside looking in perspective on it. And that's enough where you're spending a lot of money, not worth investing in when there's other options. Oh,
yeah,
like China's the only thing on the table. But I do know a lot of people who invest heavily into China. I mentioned before Warren Buffett started buying up stuff in China, increasing his position there because he felt like it was undervalued. He was right because when he bought in, it did go up quite a bit, like 30%, a lot of the different stocks. But like I said, it's just weird to know that there's a government that could just turn off the switch for any of those companies at any moment when they feel like it. So that
yeah.
for me is too much. And then tariffs and all that nonsense that you could probably get into that could affect stock price. Who knows? All right. So now moving on to number 4, XUU, BlackRock Canada, the iShares Core S&P 500 US Total Stock Market Index ETF. So right now we have, to summarize, we got some crypto. You should get that. We have Canada. We have all developed countries. We're excluding China. I think India is probably excluded on there too as well, right? Because developed would
Yeah, yeah.
be, it'd be UK, it would be like Australia, all those ones, Germany, all that would be included. And then, all
It's a
right,
lot of
and
Europe
then
and Asia Pacific, but it doesn't include like Africa, South
yeah,
America, and China, etc.
and then you have the total U.S. market now. So you've covered everything now, essentially, and that's what you're going for this. Talk about that iShares Core S&P 500 U.S. Total Market Index ETF. Why not like a VOO and just do the S&P 500? Too concentrated for you, or you want to be as broad as possible?
Yeah, just so if you buy a VOO, you're getting exposure to the 500 largest companies, which is great. But if you buy the total US market, you're also getting exposure to mid cap, small cap companies. So it increases your diversification from hundreds to thousands of stocks. And the reason why XUU was the largest allocation in that portfolio is because historically speaking, the US has outperformed every other market and has had the best returns over a multi-decade period. Now, of course, that's not to say that that historical outperformance will continue, but it's crazy not to have a major allocation to the U.S. markets in a portfolio like this. So, if I was going to sort of rank these ETFs, I would just go in reverse order of
Yeah,
how we discuss them in terms of like the size of the potential allocation. But yeah,
I think I started with Evolve cryptocurrencies to shock the audience. I think I did a little
sure,
gotcha, guys.
yeah, yeah,
Like,
all in.
crypto? What? Retirement? Because I feel like retirement and crypto is like what? Uh, let's talk a little bit about the total U.S. market because VOO for the last, I don't know, let's just say 10 years, large cap companies have outperformed small cap. That's why a lot of people went heavy on VOO, VFV. I know I did, but that's obviously not going to stay the trend. Everything just flips on its head every 10, 20 years in the stock market. So do you think it's just maybe a more conservative approach going XUU is just preparing for that inevitable. It's inevitable. These large
Yeah,
companies, there'll be years where they don't overperform, like probably like right now, and there'll be years where small caps come back up, they start overperforming. It's just like not getting too stuck in the current 10-year cycle because we got to look at this at a 20, 30
yeah.
year time frame.
No, it's 100% more conservative, which is why
Yeah.
that's like the retirement portfolio strategy, I guess.
Because
But
someone just
it,
base sorry, go ahead.
no, well, I was just going to say, like, if you have a really high risk tolerance, you can just YOLO all your money into like the QQQ and just
Yeah.
hope for the best. But
Yeah.
you're going to see a lot more variance and volatility. So it just depends, like, what do you want to see when you log into your portfolio every week or every month or whatever? Do you want to see like a lot of ups and downs, or do you just want to see kind of like steady growth?
That's a hard one. Because if I was 20, I'd be thinking both. I'd be like, I'd love to go up and down, but then if I was 20, I'd like to be able to map out exactly where I'd be in 30 years as well. I'd like the predictability of knowing I'd get like a 10% return for the next 30 years. But then I don't know, maybe that could be 20% over time if I just went the YOLO method. It's like, how much of a gambler are you? I'd probably just go the safer route and then just go focus on other stuff with my life. And just, to be honest, this is, there's like alternatives to everything you're saying here. And like you mentioned before, like there's probably an alternative to ECC that's almost identical that you could find. There's alternatives to VCN, VIU, XEU across the board. There's always like two or three good, almost identical alternatives. But I like the structure of what you did here. Cryptocurrency because you need exposure. Even a guy like me who's apprehensive is now getting exposure to crypto. You got Canada, but hey guys, home country bias. Don't get too much into Canada. Keep it. My recommendation as a guy, like I said, who's just a guy, 10% or so. VIU, Vanguard, developed excluding China and India. Yeah, that's good. And then XUU, heavy on US because US is outperformed every other market for the last, let's say, 8 out of every 10 years. I think that's the stat that's going around. So there you go. And I think when you're investing in XUU, it's ask yourself, will the US become the Roman Empire anytime soon and just crumble in the next 30 years? If you think the US will still be around in 30 years, you're pretty safe with that bet.